Well, housing prices have fallen and home sales have risen. Today, joining us for our Money Monday is David Seeger, of course, to talk more about that. So this is great news.
Oh, it's definitely great news. We've seen some upward trends in terms of home prices, 4.1%. They've gone up just this year in the Toledo market, which is really good.
Absolutely. Now, what is the main reason for the bubble that we're seeing, really?
Well, the bubble happened, and actually it broke in 2007, 2008 in that general vicinity. A lot of people were getting loans that they shouldn't have got, in as much as the lenders were being kind of loosey-goosey, if you want to call it that way, in terms
they were
of
being pushed to.
Yes, they were. There was a lot of that as well,
Yeah.
political part of this as well. And at any rate, they were able to get loans that they probably wouldn't get before or shouldn't have, which allowed them to buy homes, which created additional demand for homes, and that pushed up the prices more than what they would be normally.
So we're seeing a recovery, but a lot of people still so underwater they can't afford to sell their homes. I've seen that in my neighborhood.
That is correct. About 1 out of 4 people in America, they're underwater with their homes, meaning that they owe more than the home is now worth.
Right, it's amazing.
Now, the housing market has most likely stabilized.
Well, locally, I would say yes, probably. And that's largely to do with the HPI numbers that came out the first quarter, where in Toledo, they dropped negative 0.76%. That's the lowest drop we've had in a long time. So, plus, with the additional movement of home sales in the second quarter, that would suggest to me that we probably have reached bottom and have stabilized in the Toledo market. Based on the combination of these numbers, that's what we can infer by it. We'll know when the numbers come out, late summer, early fall, for this past quarter, but at any rate, it looks like we probably have stabilized based upon these numbers alone.
Wow, so how low could we possibly go? Like,
in terms of
actually, like, with the market, how low can prices actually get? I mean, that you're saying that they're stabilizing right now, but what is the possibility?
Oh, a very distinct one. If we have another economic slowdown or double-dip recession, it could very easily start the clock going in and starting to go the wrong direction. Very easily that could happen.
Wow.
Exactly.
Yeah, things didn't sound too good with Bernanke and the Fed last week when he had that meeting and that announcement that they may have to actually start printing some more money.
Yeah, exactly. He's concerned.
Yeah.
He's concerned.
And that made everybody very concerned.
Market dropped that day as well.
It sure did.
And David, what would your advice be to somebody if their mortgage is underwater right now?
Well, there's a program that's available called HARP, H-A-R-P, Home Affordable Refinance Program. And if your home is owned by Freddie Mac or Fannie Mae, your mortgage is owned by Freddie Mac or Fannie Mae, you're able to go ahead and get a refinance with your local lender. So you can go on to their website and check if your home is, your mortgage is either owned by Freddie Mac or Fannie Mae. And if they are, then that qualifies you for the HARP program. Call your local lender. They could help you as well determine if that is the case. And you can take advantage of the low interest rates that are available right now.
Would you want to go and maybe change your mortgage from one company into that
Freddie Mac, Fannie Mae?
Yeah.
You wouldn't have to necessarily.
Would you be able to do that?
If your current lender is participating, you're all set.
Okay.
Or you can find another one as well. Shop around for rates. That's the key to it.
Gotcha.
All right,
Beautiful.
David. Yeah.
Great advice as always. Thank you, sir.
You betcha.
Yeah. It's time now for our second part of today's Money Monday with David Seeger. David, nice to have you with us again.
Thank you.
Now, during the break, David was we were going to talk about the great news about the housing market, but this morning, the Dow, some bad news. Right,
the Dow Jones Futures that you hear about, actually it's going to open at 149 below fair market value, meaning that it's going to be a rough opening this morning, down 149 already. Plus, the 10-year Treasury bond reached a new low this morning at 6:05 a.m. at 1.40, and that broke a record of last week of 1.41. So we're looking at a tough start this morning in terms of the market.
What causes this? What causes?
Well, this specifically was some news that happened overnight from Spain. Additional borrowings was needed by Spain to cover some of their particular problems with their economy, and that created havoc within the European market. Now it's spilling over to the United States market.
Oh, wow.
Well, why don't you recap what we talked about with the housing market? It's good news here in Toledo.
It is good news here in Toledo, in as much as the HPI index, which is index that measures home prices, actually declined the least in a number of months or quarters to negative 0.76 for the first quarter. Okay, plus we've had home prices that were increasing in the second quarter in the Toledo market, plus the sales of homes have increased 17%, and with home prices increasing 4.1%, those two factors alone leads me to believe that we have probably stabilized or bottomed out in the Toledo market when it comes to real estate, which is excellent news.
Right. So it's starting to be better news for the home seller.
That is correct.
Still a buyer's market, though.
Yes, it is, most definitely.
A lot of inventory.
Most definitely. It'd be a long recovery. It's not as responsive as the stock market is to different news. That's almost instantaneous. The housing sector is a lot more glacial when it comes to making moves in it.
Now let's talk, David, about people that kind of, with getting mortgages easily, they were kind of, I don't want to say handing them out, but
almost
it really
to that effect
was,
they were. Almost.
It was very easy for people to get mortgages for a
Correct.
while. What is your advice to them if right now they're way underwater?
If their home is underwater, which would describe 1 out of 4 American homes, meaning that they owe more than what the house is worth, there's a program called HARP, H-A-R-P, and you can contact your local lender, your current mortgage holder, to see if you would qualify. Now, what that would allow you to do is to refinance your mortgage to get the lower rates that are available today and not have to worry about the appraisal in terms of the value of the home.
Right. I've got a question for you. Do the markets, do they follow polling data and what's coming up in November, the presidential election? Will the market see a big swing depending on who they think will be elected in November, whether it'll be an Obama or a Romney?
They do to a certain extent, and they're like anybody else. They follow these type of things, and it all depends upon what side of the aisle that you're on as to what you think that will happen after the market. A lot of times when a certain candidate gets elected from a certain party, sometimes the market drops in the short term, but then it regains after that.
Gotcha.
That is so interesting.
I've always wondered about that.
Yeah, that's a good question. Very cool.